The stock market plunge just accelerated. We have new warnings of starvation in the US. Yes, starvation. How can that be in the world's richest country? We're going to break it down, plus a lot more. Please make sure you're subscribed. Dow Jones today down over 1,600 points. This is on April 3rd, the day after Liberation Day, which was more like Liberation Disaster Day. There was speculation that there was going to be a big sell-off yesterday. It was actually even bigger today than yesterday. I've said here that I'm being very cautious on getting back into the stock market. I'm waiting for a much bigger drop. However, there are people out there that said buy the dip. And I said right here, I wouldn't be buying the dip right now because you don't know how big and how prolonged this dip is going to be. Now today, we saw the biggest drop since 2020 in the stock market, right? So pretty major and pretty eye-opening, but things are just getting started. Now keep in mind, this could all be reversed. These tariffs could be taken off in a matter of days or weeks, but maybe months, maybe years, right? How crazy is this going to get? But let's talk about some new warnings here and some other economic financial news here, and warnings of starvation because of all the food program cuts. Let's talk about this. And folks, I'm not even making this up. Here's some of the headlines. USDA local food bank funding cuts. Hunger task force weighs in. How many people is it going to be? USDA local food bank funding cuts. Hunger task force. The Times here. The new administration halts hundreds of trucks for California food banks. And some of the reports out here, USDA cuts more than $1 billion in assistance hitting food banks. Ohio food banks report the highest visitation number in 35 years, setting more records. Canceled programs in Wisconsin to help farmers grow food for pantries. Federal cuts target food bank system, folks. So it goes on and on. There's dozens and more than that, more headlines out there about this. The question and the concern is, will the cuts cause massive starvation? But the bigger concern is, why are so many people dependent on these programs, on free food programs? To me, that's the bigger concern, the bigger question. Why are we here to begin with? Right? Why are there so many people dependent on freebies, on handouts? Why? Because the cost of living is too much. Also, a lot of people in the U.S., like it or not, you may be offended by this, a lot of people in the U.S. are lazy. And that's one of the reasons why we had to have so many people come here and do some of these jobs, because American people don't want to do it. American people are one of the most obese people in the world on average, one of the most heavily medicated people on average in the world. Most people on some sort of pill or something to help get them by. We're the country most dependent on assistance too, when you look at it. Now, we're not the poorest country. If you look at other countries, of course, poverty is much more prevalent, right? People living in shacks, people working for pennies a day. So when you look at the U.S., we don't seem to be the poorest until you look at our dependency on the printing press, our dependency on the endless accumulation of debt, right? When you have an open-ended credit card, you can do these handouts nonstop. But then eventually it gets to a point where the people that are actually working for a living end up paying a bigger and bigger burden and higher costs as the cost of living continues to rise. And of course, it's still continuing to rise. Inflation is not stopping. It may be slowing, but it's certainly, definitely not stopping. And people's retirement accounts continue to get slammed. Remember, the big guys at the top, the billionaires, they already got out. Most of them got out of their positions. And I don't think they're going to come back in and buy these dips. And I don't think individuals should either. I'm not giving advice. I should say that's not what I'm doing. You do what you do. But I certainly wouldn't be buying at this moment, because things could be just getting heated up here as far as this tariff scare goes, right? And then what if the stock market sell-off leads to broader layoffs, because these companies that buy back their own stocks, they're going to panic as they see their wealth diminish, and they're going to look to cut costs. And consumers with their 401k dropping, are they going to really pull back on spending even more so? And will that cause much more significant layoffs? Because when people are spending money, jobs are created, right? when people pull back on the spending, when they're freaked out about their 401ks dropping, that causes more job losses, right? Less spending equals less jobs. But I think the biggest story out of this whole situation today with the sell-off and everything with the tariffs isn't really being reported that much. The tariffs already have backfired, folks. The tariffs were supposed to bring jobs back to the U.S., bring manufacturing back. Look what's happened, though. Look what's happened. Tariffs in the U.S. Tariffs triggered 900 Stellantis layoffs at Michigan and Indiana plants. So, folks, this has backfired. Instead of bringing jobs back, we're losing jobs in the U.S. Now, this is just a temporary layoff for the time being. And this is what we talked about right here on this channel that I don't think too many people are actually even thinking about, including this administration, is that when things get more expensive to import, you're going to see obviously a slowdown in imports, but then things that are made here in the U.S. are going to be more expensive as well. So then the demand's going to drop even for U.S. manufacturers, right? And another reason why companies don't want to come back to the U.S. because the cost of living here is so much, and they're going to absorb these higher costs for imports. So it's not just foreign jobs that are being threatened or gotten rid of right now. It's U.S. jobs, right? So this thing is going to, I think, evolve into something much bigger than I think most people anticipated. And with used car and vehicle prices already near all-time highs, I mean, we're only about 10 or 15% off the all-time highs that we saw in 2022. Not much of a correction. Still far from being back to where we started as far as price levels that started going up in 2020. So it's about ready to get from bad to worse as far as affordability goes. And with people already so deep in debt, how much more can people take? You know what I'm saying? So people that need a car are going to be in even bigger trouble. The question is, will the banks step up and still give out bigger loans for the more expensive cars? Or will the banks finally say enough is enough? Because we see already all-time high delinquencies on automobile loans. It's already 6%, and pretty soon it's going to be even worse if things continue with the cost of living going higher. And some individuals from within the auto industry are in panic mode and are predicting chaos. Let me just give you this quote right here. It's becoming crystal clear this tariff U.S. policy will cause pure chaos across the global auto industry. The more people we speak with from the auto industry around the world, it's becoming crystal clear. This will cause pure chaos into the global industry and will raise prices of a typical car by the U.S. consumer from $5,000 to $10,000. That's what they're saying. Are they just being overly doomish and gloomish and fear-mongering? You let me know down in the comments. That's what they're saying. This is out of The Verge, by the way. Economic Group concluded, the Anderson Economic Group concluded that tariffs could boost manufacturing costs by from $4,000 to $10,000 per car, depending on the vehicle. Battery electric crossover SUVs could see the price spike, the biggest of all, by $12,000, folks, because we don't have the components, right? We don't have the raw materials to make these vehicles here in the U.S., even if manufacturers come back to the U.S. So one, they're going to have to pay higher prices. Two, they're still going to have to import a lot of the materials needed and raw goods needed to manufacture these vehicles, right? So it's a lose-lose situation, folks. Ultimately, the jury's out. Will this be down the road? Will this be beneficial? It's very tough to even think that even down the road it's going to be very beneficial. But hey, something had to change, and this is a lot of people's view on this. Something had to change. Things were too expensive. It's better to try something versus nothing. That's what a lot of people are saying. But when you try something, sometimes it's even worse than trying nothing. So it's mixed reviews on that. It's mixed reactions to this. And again, let me know down in the comments. Is this going to lead to something better, or is this a huge disaster with nothing better on the horizon? It's a lose-lose situation altogether. Please let me know down in the comments. And ultimately, who will this hurt the most? Well, it's not going to hurt the top 1%, right? They can just lay people off and they can cut costs. But the ones getting laid off, they're not in the top 10%. Take a look at this chart here as far as the debt consolidation here, folks. The top 1% of U.S. earners now have more wealth then the entire middle class, folks. They crisscross. It's been over a year ago, but since then it's gotten even worse. I haven't found an updated chart, but it just got worse the last quarter. We even talked about it here. I just didn't have a chart to show you at that time, but we talked about how the all-time high gap right now between the mega rich and the bottom 90%, the top 10%, consistently accumulating more wealth every time we look at it. Every time the new number comes out, it's always getting worse, right? The divide is getting worse. Now, there's still talk of checks being sent out, what they're calling recoupment checks or refund checks from the savings from all the wasteful spending that they're finding and stopping. But while that may seem good, if you end up getting a check, of course, that's always fun. Most people think it's fun. They think it's good. But if prices are already high on materials and you have a surge in people now being able to buy more things, more cars, etc., going out and spending in general, what's that going to be? Is that going to be inflationary or is that going to be deflationary? Of course, it's going to be inflationary, right? So if you send out these checks, it could get even worse, folks. So it's going to be interesting. It's going to be a wild ride and a fun show to watch. Bottom line, folks, buckle up. Keep your eye on the news. Be cautious about spending. Be cautious about investing. Now is a very, very important time to really pay attention to what's going on and stay ahead of the economic financial curve. And again, let me know your thoughts down there as far as investing. Are you buying the dip? I'm not buying any dips right now. It's going to take a bigger drop. I'm waiting for at least 40 to 50% drops, maybe more, before I start dipping in. I may start getting in a little bit, dollar cost averaging in about a 40% drop in the overall markets. But it's going to depend on individual stocks as well, right? So this could get really crazy, folks. It's crazy already. It could get even crazier. This could be just the tip of the iceberg. And ultimately, this could be the economic, not just turbulence, but the economic turmoil that many people have feared for many, many years. Remember, when everyone is dependent on easy money, and then someone comes and throws a wrench in the gears of the machinery, chaos evolves, folks. So let me know what you think about this down in the comments. We're going to wrap this up. Big stock market plunge. What's going to happen tomorrow? We're going to keep an eye on it. As always, keep stacking. Bye for now. Peace.